from the Motilal Oswal conference as well. Sachin Ashok Salvi, the CFO of Krishna Institute of Medical Sciences, joins in from the 28th Motilal Oswal Annual Global Investor Conference. It reported a steady revenue growth in the first quarter. There was a mild dip in occupancy. The average revenues per occupied bed were higher in the first quarter itself. Thanks a lot for joining in. Always a pleasure speaking with you. The first quarter occupancies were slightly lower. So the question then is, the second quarter so far, have you seen a bit of a pickup? And what are you guiding for this year when it comes to occupancies and average revenues per occupied bed?
Certainly, the second quarter we are seeing a good growth. The percentage occupancy is improving. In fact, seasonally, Q2 is always a better quarter for us. So we are seeing a good uptick in terms of occupancy in Q2. Percentage occupancy is likely to remain in the range of 50 to 60% at the year-end level. That is what our expectations are.
And this is on increased base, right? Because you have the Nasik hospital coming in as well.
Yes, so the Nasik hospital was likely to commence operation in the month of July, but certainly it got delayed by about 1 month, and we are expecting to start it by 31st of August. In Nasik, we will be starting in the first phase about 100 beds. So considering this, I'm talking about the percentage occupancy which I just mentioned.
Okay. Got that. Sachin, hi. Good morning. Prashant here. So just a quick sense. I think you're adding a total of what, 2,000 beds over the next year and a half?
Yes, about 2,000 beds we are adding over the period of next 15 odd months. That includes facility at Nasik, Thane. We are coming up with 2 hospital units in Bangalore, one at Marthali in Bangalore, and the second one is near the Electronic City in Bangalore. Which is about 250 bed hospital units. So about 2,000 beds we are adding over the period of next 15-18 months.
So you'll basically move up to about 5,500 beds by the end of all of it?
Yes. So currently we are operating 3,975 beds to be specific. By the end of the entire expansion, we will be at 5,500 odd beds.
And Sachin, hi, morning. All of this is, taking place, this entire expansion through your internal accruals. I mean, just give us a level of the cash on the books that you'll be left with, if at all, after this expansion is complete, and if you're looking to borrow at all.
So currently we are gross debts at around 1,200 crore. Our debt equity ratio is about 0.5:1. Some of these expansions which we are doing is out of our current accruals because the business is literally giving a cash of about 500 to 600 crore every year. We are doing some of our expansions out of our current internal accruals, and we will be raising some debts. We are ensuring that the debt equity ratio remains in the ratio of 1:1. At the end of this current expansion which we have planned, that is about 1,500, 2,000 beds which we are adding over the period of 15 odd months. Our debt equity will remain in the ratio of 1:1, and our debt would be certainly in the range of 1,600 to 1,800 crore at a gross debt level.
Okay, so just to clarify, Sachin, you're saying that your debt equity currently is at about 0.5. It will go up to about 1:1 as you go through this expansion, but it won't go above, it won't cross 1. Got that? At the peak, got that.
Cross it.
Got it. And you said that at a yearly basis, the business throws up almost 500 crores of cash. Again, if we talk, end FY25, by the time you'll be deploying some of that cash, some of those internal accruals as well, how much cash would you like to retain on the books? What are you comfortable with? Because you're doing a mix of internal accruals and debt to fund this expansion. So what's the cash right now, and how much would you want to see it at by the end of the year?
So currently, as on 31st March 24, we were having on our books about 125 crore as cash. We will continue to maintain that cash level at the year-end financial year 25.
All right. What really stood out in your first quarter was the average revenue per occupied bed, because you are doing a lot of these high-end surgeries, etc. as well. So wanted to know, in your overall proportion, how much revenue comes in from high-end surgeries, and what's your target then on the average revenue per occupied bed? Because all of last year it was close to 32,000, and the first quarter itself it jumped all the way up to 38,000.
So the first quarter average revenue per occupied bed had improved mostly on account of optimization of our bed capacity. LOS, that is length of stay, was quite low in some of the segment. That is the only reason. It will sustain for about another 1 or 2 quarters. This is what we are anticipating. As far as our contribution from the higher end surgery is concerned, it is almost to the tune of 25-30%, and that would be certainly maintained.
All right, so 25 to 30%. ARPOBs stay around that 32 to 35,000 rupees mark. I'm just looking at rough calculations. You said you'd be close to around that 5,500 beds over the next 15 months or so. At peak of this after this expansion cycle completes, you could do revenues of what? A little over 5,000 crores? Is that a possibility? Or if you take the ARPOBs further higher, depending on how higher you take it, it comes to close to around 5,500 to 6,000 crores as well.
Certainly 5,000 or 5,500 is in range, because most of our facilities which are coming are in the metro cities. One of our facilities which is coming in Thane, there itself the ARPOB is hovering around 50 to 55,000 for the listed players. Of our Bangalore facility, for example, Bangalore units, the ARPOB is hovering around 60-65,000. So currently our ARPOB is about 35,000 in some of our units. So considering that and considering the growth expansion which we are envisaging in coming years, certainly 5,000 is in range, and ARPOB is likely to improve further.
That's by FY27, likely to be about 5,500 crore on the top line?
We are anticipating it to be in financial year 26, because these newer facilities, given the market, given some of these are virgin markets, we are anticipating this to reach by financial year 26, if not 26, certainly in 27.
Sachin, we'll leave it there. Thank you very much for your time. Good speaking with you on the sidelines of the Motilal conference.